We're here in Monte Carlo for the Rendez-Vous de Septembre. For AMBest TV, I'm Richard Banks. And I'm joined now by an esteemed panel to discuss the reinsurance industry remaining relevant in the current environment. Please welcome Mohammed Kotba, who's Managing Director, Treaty Division at UIB. We've got Julian Anoisi, who's the newly appointed Chief Executive of Europe for Guy Carpenter. And we've got Mahesh Mistry, Senior Director, Head of Analytics at AMBest. Gentlemen, welcome. So let's kick off by thinking about how important is it for the future of the insurance industry that it seemed to be serving the needs of clients. Mohammed, perhaps you could start off.
Well, I think that's vital and probably one of the biggest challenges facing us for the next 20 years. The world as a whole is changing significantly. I think we need to make sure we stay relevant to the industry. There are a number of themes, I think, that need to be focused on. I think the client experience will be key, especially with the new generation and with the adoption of more and more technology. But I think one of the key areas that I would like us to continue stay focused on is making sure that we kind of stick to the social element and the social core values that insurance is supposed to be serving and reinsurance. We might have drifted away from that during certain times. And I think focusing on risk mitigation and kind of reducing the protection gap, that's going to be one of the key features I think that the insurance, reinsurance, and the broking sector has to focus on.
Julian, those are views that I think you would echo. There's some topics in there that are very close to your heart.
Indeed, rather than just repeat everything, but I'll try and highlight some of them. I mean, until 18 months ago, I was a buyer of reinsurance myself, and I think not only is it critical, I think it's absolutely the central function is to remain relevant to the client. If you're in the C-suite today, you are faced with a vast array of problems you just touched on, which are well known, so I won't document them, but in essence, those are the ones that you're looking to deal with. And I think the role of the broker is as a client advisor, and almost begins with the advice and then the transaction to suit. So that's how we're going to remain relevant, is if we but if we continue to solve problems that perhaps 10 years ago clients weren't faced with.
Mahesh?
Yeah, I mean, what I would say is that reinsurance has always been important for over 100 years now, and it's going to continue to remain important. It's an integral part of that insurance value chain to provide protection, not just to the cedants, but to the policyholders that are out there as well. And in all walks of life, in whatever we do, if we want the economy to function, reinsurance has to play a major part in that overall, whether it's construction, buildings, driving your car, having a roof over your head. And particularly, as we've seen over the last, say, 10, 20 years, reinsurance has been instrumental in the development of new products, supporting the market, ensuring that cedants have capacity to manage their balance sheet, to smooth out earnings volatility, ensuring that the market has adequate protection against some of the key peak exposures and accumulations out there.
So let's drill into that a little bit, because new product is a really interesting area here. We've been here in Monte Carlo. We've seen a number of tragic events that have occurred across the world. Big events, huge loss of life and economic costs, but the insurance impact has been perhaps minimal. How do we perhaps close that protection gap? Julian, do you want to?
Well, I think you just said it. It's new products. I think the products that we have offered traditionally are fine, but when you start looking at the protection gap, which is evident everywhere, not only is it clear in the global south in less developed economies, but you also see it in developed economies. It's well documented proportion of people that buy some of the covers which now they're suffering from. So new products, whether that's looking at it on a community basis as opposed to trying to sell to individuals, because one of the problems is we produce the products, if nobody buys them we haven't solved the problem. And it's innovation. I mean, you talked about mitigation earlier. One of the things that we've got to do is look at shifting some of the spend from post-loss to pre-loss. Again, it's well documented that every dollar that's spent before loss is equivalent to saving of $8 to $10 post-loss. So how do we get some of that shifted up front and start to mitigate and indeed adapt, because this isn't going to go away?
Hamid?
Yeah, fully agree with the comments. I mean, if we focus particularly on the Nat Cat exposure in particular, which we've seen some very tragic events over the past few weeks, and the protection gap still is there. And I think that's one of the key areas that should be focused on. And in that area, I would say partnering with governments, so public-private partnerships will be key. In a lot of those countries, if the government's not engaged and there's an element of not just awareness, but kind of direct involvement by the government. We've seen, just to give an example, the tragic earthquake that took place in Morocco last week, and there would have been an even bigger protection gap. I mean, there already is, obviously, but at least that was a very good example of a government and an insurance industry that engaged. It took quite a while to set up, but ultimately 3-4 years ago, they did set up a pool. They also took advantage of the innovative products through a parametric cover. And while we will still see a gap, but that has really helped and is giving a lot of funds to the government that will be really necessary at such a crucial time. And I do hope that this also will give a bit of an incentive to other countries in the region and wider area to really engage on that front.
So the insurance industry already has the tools, and it's just a case of applying them effectively.
Yes, I think there's a number of solutions that have already been adopted in a number of territories. It's just a matter of finding the right partners, making countries that historically have not paid much attention to that exposure to really invest in it. And there's been plenty of studies demonstrating how much of the cost, not just socially or economically, and also politically. And I think one of the advantages of having these funds set up and then having a loss, which is always an unfortunate event, but it really does focus the mind, and it also gives a lot of political credit to those decision makers who took the initiative, and hopefully that encourages others to follow suit. But the products are definitely out there. There's always room for improvement, but it's a matter of getting it to the right areas, and of course finding a way to fund those products, because we have the best of products out there, but how do we generate enough income to buy those products? I think that's the real challenge.
So Mohammed talked about public-private initiatives. It's been your life for a little while, Julian. How well developed is that, and where are the opportunities?
It's getting better. You just alluded to Morocco having put that in place relatively recently. I think it's well known that the Canadians are looking now at implementing flood pool, which perhaps will become broader and go beyond flood into wildfire and other perils. Australians have expanded theirs into cyclone. The Dutch are looking at what they're going to do. So I think you're seeing more and more and more of it. But I just wanted to pick up on one point, which is it's always about who pays for these things. And one of the things I think we've got to get better at is persuading philanthropic capital that actually investing in an insurance product has a number of benefits, one of which is it should be done with a quid pro quo for risk mitigation, so that if you're putting philanthropic capital into an insurance product, then the insurers are going to use their knowledge as to how to invest in risk mitigation, flood defense, whatever. And also, you mentioned governments. Governments at the moment have other priorities, as we all know, but they also have one fundamental problem, which is a lack of understanding of what our industry does. We have got to get better at communicating our value proposition, because today what you will see is, well, we don't buy insurance. Well, they're missing the point about the value of buying insurance. It's not just a spend, it's a whole value proposition that comes with it. So philanthropic capital, governmental capital are two areas that we've got to be much better at communicating with.
So when we're thinking about the reinsurance industry remaining relevant, obviously that sharing that to that understanding of the industry is crucially important. Mahesh?
Yeah, I mean, when we look at the protection gap, you've got a number of figures out there which look at the economic loss against the insured loss, which is out there, and that gap is still substantial today. One could argue how it's been changing over the last decade. The exposures continue to increase. We keep building on floodplains and those type of things as well, so that may not help the situation. Regulators are at play as well. So everyone talks a lot about the protection gap on the Nat Cat side, but we see other perils, other areas which are also developing, like cyber. We see the accumulation of secondary perils and those type of things. So it depends what we exactly mean by covering this protection gap. But clearly there are opportunities there. The dynamics of the market has changed considerably over the last 10 years. The landscape that we see today is not just talking about nat cats, but other perils as well that we see, and the economic difficulties that the markets are faced at this point in time. So the reinsurance industry really has an opportunity to look at what's going on in the market, to find solutions, help the primary market to find solutions to help cover that gap. But as you mentioned, it's a very difficult thing to do. We all talk about climate change, climate risk, and the frequency, severity events coming across. So there's added complexities today that companies need to price in. With pricing these added complexities, maybe the pricing should potentially be higher, but if you can't get the balance right between, say, the cedants, the primary insurers, the brokers, and the reinsurers, it becomes a very difficult situation to manage. And then at what point do the governments come in with these nat cat schemes, etc.? So I think it's quite a diverse and challenging environment at the moment, but the reinsurers have played an important part in the past and will play an important part in the future.
I mean, just one point on that, because I don't disagree with anything you said, but I think the point about pricing is if we simply continue to increase the price, we'll never outrun the losses. So, go back to my earlier point about thinking about this slightly differently. And secondly, you'll arrive at a point where the price becomes too expensive to pay. So back to your relevance point, other people start to think about, well, are there different ways of managing my risk? And that's where so I think we have to be careful about just continually trying to outrun the losses by continually increasing the prices.
I think that's a great point. And I was thinking there's a sense that the insurance industry is often accused of trying to solve the last problem that it faced. How does it get on the front foot, do you think?
Well, I think it takes me back to my earlier comment about the social value of our industry. I think this is a key part of our offering. It's not just about covering the commercial and industrial risks, it's also about really getting the society to feel of the value-added proposition that we have. Risk mitigation is key. I mean, all of these, the nat cat schemes, for example, going back to that, I fully agree that risk mitigation is one of the key investment parts of these pools, and they should be partnering with the reinsurers and the brokers and other providers who can, add to that. I mean, following those events, it's going to make a big difference what the general public feels. So I'm hoping if we're going to compare some of the recent events in different countries, parts of the population get huge support because of those funds and because of those projects and the collaboration between the different entities in the country, and others don't. And I'm hoping as time progresses, people start seeing the benefits of having those having the involvement of the insurance and reinsurance sector. It's really led by the reinsurers. We're always seen as being the second level of protection, but in many ways we are driving what's happening on the ground.
I just had one point on the social, duty. What I think was the word you used, and I absolutely agree with that. I think as an industry, we have always performed that. If you go back 100 years when electricity was invented, the easiest thing would have been to say, well, we're going to exclude fire following an electrical fault, and we didn't. We invented the, I forget what the PAC stands for, but the testing council, effectively, to actually test the quality of electrical goods. We didn't exclude death on the motorway when the speed limit was increased to 70 miles an hour. We introduced the safety belt. What's the equivalent for climate change? I don't know. But that's, I think, a duty on us to figure that out, both product-wise and mitigation-wise.
Yeah, I mean, I agree as well. I think one thing the industry could do better is on transparency and clarity in terms of what is covered. We've seen with the situation with COVID, with the war in Ukraine, and the terms and conditions that are there. So the industry has gone through quite a rigorous exercise now in terms of looking at those terms and conditions. And whenever things go through litigation, there's always bad press, etc. So I think the industry could do better at having a bit more transparency to the market and understanding with in terms of what is covered in policy, and making sure that that's clear to their policyholders.
So insurance has got a good news story there. It just needs to be more effective at getting that good news story across.
Yes, I think there's much it has to offer. I think the story so far has been good, but there is definitely room for improvement. I think one of the key things I wanted to touch on also is on the pricing side. I think one of the challenges that we're going to be facing for many years to come is the length of our value chain and the chain between the original insured and the reinsurer. I think that will be challenged over the years. I think the acquisition costs in the industry continue to be high. When we compare every dollar being paid compared to the net risk premium, I think that will be challenged. And I think the adoption of technology will play a pivotal role in the coming years. We're quite a traditional industry in many ways, and I think there's a lot of scope for disruption by outsiders, and I think that will ultimately benefit the industry and the policyholders.
Disruption by outsiders or by disruption by insiders, Julian?
Well, I go back to my value proposition point and articulating the value proposition. I was talking to somebody last night and explaining to them that, when I get invited to a dinner party and somebody says, "What do you do for a living?" I say, I'm involved in terrorism risk. And the conversation lasts for hours. If I said I was involved in insurance, they'd have probably gone on to find somebody else. The point I'm trying to make is we've got to be better at bringing people in with fresh perspectives that want to work here and want to make a difference. So that's one form of disruption, and it's not the one you were referring to, but it's another one that I think it's worth making the point.
Final word from you, Mahesh.
Yeah, I think, we know that reinsurance industry is integral to the value chain of insurance, and the market wouldn't operate effectively without reinsurance there. But there is an onus, as we've seen over the last, say, 3 or 4 years, that reinsurers are not meeting their cost of capital, and as a result of that, they've had to take advantage of the hardening conditions, but look at their portfolios. And maybe the primary market has benefited from reinsurance smoothing out earnings rather than having reinsurance there to protect the capital base of companies. And maybe that dynamic needs to shift a little bit more. But ultimately, to make it work, there has to be the right equilibrium between the various parties involved to ensure that everyone, not just the policyholder or the reinsurer or the broker or the primary insurer, is benefiting, but it all works in harmony.
Gentlemen, thank you very much indeed for joining us today.
Thank you.
To be here.
For AM Best TV, I'm Richard Banks.